Good morning, ladies and gentlemen. Welcome again. I'm quite surprised how many of you arrived this morning after such a demanding evening arranged by Mark. Thank you very much. And I hope that after this presentation you will be willing to say that it was worth getting up so early and to come. The aim of my presentation is to shortly introduce to you how the credit management system works in a proper industrial producer, a company called Kollert. I would like to describe how the credit management system at Kollert was developed, built, and what is the current setting of our credit management system. Let me shortly introduce myself. My name is, you already know, it's Tomas Kollert. I've been working for Kollert Group almost for 18 years now, and the last 7 years I work as the head of risk management. That's my main responsibility. I will start with a short introduction of the company. Company Kollert was established in the beginning of 1990s. It's a company based in Česká Třebová, which is north to Brno, maybe 90 kilometers far. The main shareholders of the company are European Bank for Development and Reconstruction and also Czech government. There are also 4 original founders of the company who built it at the very beginning through a privatization process. Kollert Group consists of 3 production plants: Kollert Czech, Kollert Bulgaria, and a newly acquired acquisition company called Heat, which is also based in the Czech Republic, in the city of Liberec. We have also several trading companies located in Germany, Poland, the UK and Austria. Our sales guys are quite proud of saying that we sell our products from Australia to Chile, and so you see that we are covering almost the whole world. The production portfolio consists of, or includes steel panel radiators, bathroom radiators, designer radiators and convectors. In 2013 the group sold over 1,300,000 heating units worldwide, and the consolidated turnover was 1.6 billion Czech crowns and profit around 50 million Czech crowns. We expect that this year should be a bit better in both these parameters. Next one, yeah. This slide should explain to you why we built the, I would say, so strict credit management at Kollert. In general, we can say that it's because of our bad experience in history. Kollert Group suffered huge losses due to irrevocable debt in the late 1990s and the beginning of 2000s. Losses were amounting to hundreds of millions, mainly in the Czech Republic, Russia, Poland and Germany. I found out 2 specific features for this time period, and this I would describe as sales guys were at those times responsible just for sales, and they were willing to sell almost to anybody who asked for who ordered any radiators, and they were absolutely not responsible for collection, and they absolutely no cared about examining the creditworthiness or credibility of our customers. The second feature was permanent competence fight between sales and finance. There was no clear or transparent policy set from the top, and the chief financial officer and the sales director were fighting about their competencies and about the system of credit management itself. Although there was already some credit policy in place, nobody from the top to the bottom of the company cared about it too much. In general, we could say that at those times the euphoria after the revolution was already over, and I would say that there were just few businessmen who had experience with real market economy, and unfortunately there were not that many in Česká Třebová. Next one, please. In 2002, Kollert, due to these huge losses, was almost on the verge of bankruptcy. So the shareholders of the company were forced to appoint or to hire new experienced management. So we were joined by a new CFO, new sales and marketing director, and also several changes in personal occupancy and sales department took place at this year. We also installed a new remuneration system for both for our internal and also for our external sales representatives. So the current system includes incentives and also penalties for collection, and is not based just on sales performance. Very strict credit policy was set up at the time, which we called, or there was a synonymous used, zero tolerance, and was pretty strict. So we terminated cooperation with several of our German customers, and we also declined several new opportunities due to low credibility of these new prospects. Very strong authority of credit management was granted by top management or by the board of directors as well. Our motto for this period could be demonstrated as these two last bullet points. Losing customer equals to just, I would say in inverted commas, just losing margin, which consists of it's between 10 to 20%, but losing the whole receivable means losing 100% of our money. Next slide, please. I already mentioned that nowadays we have very strict credit policy, which is valid for the whole Kollert group. Responsibility for collection is primarily at the sales department. Incentives, penalties incorporated in the remuneration system, partially based on collection of receivables. Credit management has almost unlimited authority in its area, granted by top management and by the board of directors. Each of our customers has its own credit limit, there are no exceptions, and in our understanding, internal credit limits equals to secured limits, which means secured means insured, or credit limit secured by bank instruments. We also have a sophisticated hierarchy of credit approvals based on the volume of the credit, which starts from the level of risk management through top management and ends at board of directors. Once a year, there is an approval process of all credit limits provided by Kollert. It usually takes place in January, and it's done on top management and board of directors level. The supervisory board of the whole group is informed about these credit limits. Next slide, please. Each credit limit is quoted in distribution contracts with our customers. Credit limits are put in our ERP system, which means automatic blockage once the limit is exceeded. Once this situation gets to this point, the sales guys are not able to dispatch the goods to our customers, and they have to start a sort of negotiation with us to unblock the limit. Apart from credit limits, also the payment terms, which means the maturity of our receivables, are also approved once a year by the top management. The standard maturity, which is provided by Kollert, is from 60 to 90 days, with quite a few exceptions, with 120 days, which is the maximum. Next slide, please. I already mentioned that we use several instruments within our credit management system to secure our receivables. So let me summarize them. The standard which we use the most often is credit insurance. I am quite sure that you are quite familiar with this insurance type, and Marketa is sitting over there. She gave you a presentation yesterday. We also use several banking instruments to secure the debt, bank guarantees, and also letter of credits. For our business model, letter of credit is not that suitable, or in my opinion doesn't make sense to use LC quite often, because we are not in business of individual single big deliveries. We are in business of continuous deliveries, so it means several trucks with radiators a week, or several trucks with radiators a month delivered to our customers. So using standard LC would be quite administratively demanding. Currently we have a few bank guarantees and standby accreditives or standby LCs opened, and mostly with East European based customers. We have one specific, which is a deposit. It's used by our Ukrainian customer. We know him for almost 20 years, and unfortunately we are not able to find out any different way how to secure the receivable with this customer. So it works the way that exact sum of his money is deposited in our account, and against this money we deliver him the goods, and it has a special index which says if the deposit is, let's say, 100, the open credit is 200. So the half of the open credit is at our own risk, and half is secured by these deposits. Russian Federation and Belarus, these are typical examples of prepayments or advance payments, which from credit management point of view is the ideal case, because we have all the money before the delivery. On the other hand, from financial point of view, it's not that interesting, because it's paid with quite high discounts, which are required by our Russian or Belarusian customers. Bill of exchange, just from time to time, and just for advance payments paid by Corrado, which means if some of our suppliers requires getting money in advance, which is mainly for deliveries of new technology, machines, production lines, presses, and this type of deliveries, we require signing the bill of exchange for the sum which is paid in advance, and also we use insurance, which is offered by Adredius for these specific occasions. Another type of securing our money is the retention of title to the goods, which is a standard clause incorporated in all our distribution contracts. Nowadays we don't have to use this instrument or this way how to solve the problems too often. We usually use it just for restructuring the inventories or stocks of our customers to help them with delivering them more or oftenly sold goods. We have also some exceptions in the system. So if our sales guys are interested in new projects and we are not able to find any type of securing or security, any type of insurance for these specific projects, there is a exception, and the sales executive or top management can approve open credit without any security. But these are really just exceptions, 1 to 2 exceptions per year. Next slide, please. There are several supporting tools which we use within our credit management system. So we purchase business information reports or commercial reports from agencies like Biznote or Credit Reform. Each of our new customers is examined through this report, and we also have insolvency monitoring provided by these agencies. We do internal financial analysis and we have our own internal rating model. So once we are able to get financial statements of our customers directly from them or from commercial registers, we also do this analysis. Another good signal which indicates the behavior of our customer is their payment model. We have a regular meeting with our sales department once a month, or extraordinary meetings if necessary, where we discuss all our problematic or dubious receivables and also new prospects. Regular visits to problematic customers. I tried to find a time to go to visit them once a year, usually with our sales representatives, and it's a good opportunity to find out more information about the customer than just from their pure financial statements. And last but not least, information from our insurers, which, for example, says that if the limit or credit limit is lowered, it gives us a negative signal, that it's an indicator that we should look after this customer more carefully. Next slide, please. As I already mentioned, credit insurance is the mostly used tool how to secure our receivables at the whole Kollert group. Currently, we have credit insurance policies with Atreides, Kupek, Hermes. All these insurance policies are based on group level, which means also our subsidiaries are covered under these policies. Almost 100 of our customers are secured via insurance, credit insurance, with the exception of this of our Ukrainian customer and one or two more customers. We have to admit that although insurance policy is much cheaper than standard banking instruments, it doesn't cover 100%, which I'm sure that you are aware of. It usually covers from 85 to 90%. The banking instruments cover the whole 100% of the receivable. What I see as a great advantage of credit insurance is that it doesn't bother our customers, because usually it's arranged without their involvement, and we don't have to ask them for opening bank instruments, which usually is not the smoothest way how to do the business with them. That's the end of my presentation, and before your questions, I have a small quiz for you. So please, next slide. So the first question is, what is the amount of water in our average size radiator, which you can see on the picture. It's a radiator 1 meter long with 55 centimeters height and 2 panels. So please, if you can. Mark, can we move to yeah. The correct answer is 5.5 liter, which is B. And last one. What is the amount of water in comparable cast iron radiator? Comparable means the same heating output or the same performance as our radiator has. So the correct answer is 17.5, which is also B. And it says that you have to heat 3 times more water in these old-fashioned cast iron radiators than in our steel panel radiators. And it should also says that it's more expensive and much less efficient. Thank you very much for your attention, and if you have any questions, please.
Thank you, good morning. Looking at the presentation and looking at the base of your company, I can see that it's basically exports. Is this correct?
No. 40 to 60. 40 for Czech Republic, 40% Czech Republic, 60% export.
Okay, 60%. Now, let's take the case that you have a new customer. I want to see the whole process end to end. When a new customer is approaching the company to get seeking for a credit, seeking for some sales, the first thing that you are asking as a professional is always the proposed sales backed by bank guarantee. That's the first step, or a kind of prepayment.
Depends on the information which is provided by our sales, and depends on territory. For example, if the new customer is from Germany and the information from credit reform or business note is a pretty good one, we go directly to credit insurance. But for example, we have customers from Tunisia, and although the reports were also good ones, we decided that these businesses should be covered in 100%. So we went for bank guarantee. So at the beginning, and after a year and a half experience, we changed it to insurance.
So you are taking also the risk of the country on top of the customer's risk. Okay, fair. Now let's say that some of the export customers, they cannot be insured because based on our experience, even though a customer is in solid condition, potentially sometimes the insurance level, the insurance limit, it's much lower than the proposed credit limit. Why are you doing this case?
If we are not able to manage a bank securing instrument, we definitely go for insurance. And if the insurance doesn't work or the limit is that low, we ask for prepayment. as I already mentioned, these are typical examples of Russia and Belarus. These customers are usually uninsurable and they pay in advance. On the other hand, we pay them pretty high discounts for these prepayments.
Andrei Sichka, don't want to make you a hard morning, but I see that, as you say, 100% or so of your accounts receivables are insured, and you've got very strict credit limit policy. Obviously, this is the move from absolute free on the sales to 100% of the control of the receivables over the receivables by credit departments. Quite good move. Let me advocate the devil. How is your feeling whether or not you control your receivables, but at the same time, how is your feeling whether or not your credit facility you provide to the sales is adequate to that sales? Are you sure you are not losing sales?
Getting better and better.
Thank you.
During the crisis, because in my opinion we are still heavy in a crisis, and especially the construction industry where we are involved. During the crisis, it limited us, definitely. It limited us in 2009, 2010, 2011. We were not able to get substantial credit limits, and that was quite difficult to negotiate or to advocate us before our sales guys. But the situation improved quite a lot, and nowadays I would say that from approximately 95% of the requirements of our sales guys we are able to satisfy.
Thank you.
Vít Brožina, IDB. Hello. Question: what do you do with the very large companies which don't allow prepayment, or they say, well, we are a really well-known company and we don't want to pay you prepayment? And then why you do the financial analysis when it's a very large company with a good credit? And then you insure it. So you pay money for insurance even though the risk is small. If you understand what I mean.
No, sure.
Why you pay for the insurance for the companies which are known for a very good credit? It's A-rating companies. Or
Two different answers. I would say the first one is our shareholder structure. European Bank for Development and Reconstruction and their general policy and their representatives sitting on our boards, who are quite keen on having almost 100% secured. That could be one of the answers. The second one is that our chief executive officer comes from banking sector, and he used to work several years for reputable big banks, and he is quite skeptical. And the last one, I would say that in the history we saw several A-rated companies which disappeared during the crisis. So in general, we pay the insurance. As I already mentioned, the insurance, in my opinion, is quite low in comparison with having 100% loss. So thanks a lot, and hopefully you learned at least something from the presentation.